Let's see what we can expect to see in the week ahead. Before we start, just a reminder, I'm not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take. As you've read, you understand, you accept all the disclosure and disclaimers, understanding that we're just performing some technical analysis for educational purposes only. So what to look for going into the week? Martin Luther King Day tomorrow, so heads up for that in the States, for the US markets. I think something which is, we'll always start with the ES, so let's look at the ES. Going into here, what's interesting is last week we talked about the fact that we were definitely bullish and it looks like the market wanted to press higher, but that the odds were starting to favor to see some kind of retracement or some kind of sell-off. And it doesn't mean it had to happen, but the longer we wait before it happens, the higher the chances of that happening. Now, of course, we're going into an expiry week, so the chances of that happening were reduced, and we closed fairly bullish. So we usually tend to continue in the direction we closed on the expiry week here. We did have some interesting chances to trade, especially towards the end of the week, to get some moves down on that failure at 1480s. That's what we were looking for. Had a little move down, but it got bought quite aggressively. Now, if you see here what we've got going into the week, what I'm going to be focused on is this recent move, 1460s into those 1480s. Again, the range is quite tight. Got bought here. The 123 extension is coming in at 1484s. Okay, so I think definitely I'll be interested to play the downside if we continue to see any sharp failure around this 1480. But if we start to press higher, then the next level of interest for me is going to be to keep my eyes peeled up for 1480s, 1484 to be exact. And on the downside, again, the focal point will have to be those 1473s, protecting that 50 back that got bought at the 1470s. Now, just to give you some levels to the upside for the whole week, of course, the 1500 psychological level is a major level. I think if we keep on pressing higher, also that whole 1490s, 1492 range is going to be interesting because it's an extension target. It's the 150, 161 extension of this move. But again, clearly, if we continue, what I wanted to put into perspective is if we continue to break higher and hold above those 1480s, then I'm going to be looking at this 1480 as the low range, right? And tight, these 1492s as the high range, at least going into the week, okay? Ultimately, it's 1500, which is the psychological level, but that's what I'll be looking at here as we start the week. However, if we fail to go above that 1480 and we're holding below that, then I'm going to look at that as the resistance, and then the support will be down in these 1470s. So you see it's pretty tight. It's pretty much 10 handles to the downside and 10 handles to the upside. So it's going to be tight, but we'll have to see how this plays out. I still think that the quicker or the more aggressive move, once we see it, should most probably come to the downside, not to the upside. And by more aggressive, I mean if you see say 30 handle day, something like that. So keep in mind we've still got that huge gap open to the downside. But that's what I would say going into the ES for this week. And another thing is, of course, keep in mind we've got a lot of earnings coming out. So definitely the NASDAQ is going to be something which is very interesting. And a lot of people, I posted this chart I think a week or two ago. It's the NASDAQ. So looking at this potential topping pattern here now, this would be a beautiful reversal here if we held this high range resistance and moved all the way back down. However, keep in mind we do have a lot of earnings coming out, so we could easily see an aggressive pop higher. So don't get lulled into complacency. We've got earnings, but again, I think the ES is going to guide here, but eyes on the NASDAQ because it's an interesting pattern. And gold, before we go into some of the FX pairs, I think something which is interesting on the gold chart is that, let me just clear this up, is we talked about basically that very nice symmetrical move we had on gold, which was A, B, C, D played out. Then all of a sudden, a lot of people we said would start to get excited for the third move, but these rarely play out, or they usually end out badly for the guys playing the continuation that missed the first nice move, right? And what happened here is that we started to get sellers coming in quite aggressively, and on this move here, so highs to lows, so basically 1756s all the way back down into 1635s, 50 back got sold, very pure protection of this 1700 level, right? The range we're in now is 1700, 1600. So basically hardcore selling, well, hardcore, just pressure on, right? And we see a very aggressive buyers coming here and a failure to take out those previous lows. So what we said is this was going to be the pivotal level, 1635s. If we got a daily close below here, we're on a daily chart, by the way, we would expect to see those 1600s come relatively quickly. But if the market was unable to close below these 1635s, we're looking for a test back into high range 1700. Okay, so that's exactly where we are now. Now, I wouldn't be playing this as a fib because, well, you know, we can go into more detail some other time, but that's no longer a fibbable or tradable fibbable move, if you want, in the way I look at the markets. But basically, what I think is going to be interesting going into the week is that, remember, broadly speaking, we've got 1600, 1700, and 1800 as the much bigger range here, right? And now that we've failed to break lower, it looks like market is going to try and press the upside quite aggressively. And a lot of people are starting to turn bullish at highs. Now, I've got absolutely nothing wrong about that, but the only thing I wanted to point out is just I got some emails. It is just watch out for that 1700, right? If we can't break above and hold above there, then I would not be surprised to see those 1600s come into play again, right? If we break and we start to hold above, then we could see a move higher. So the only thing I wanted to say here is I don't think it's a done deal either side. We're smack inside this mid-range, 1800, 1700, 1600. I would rather see it move back down. I think we've got some chance to see some kind of downside momentum. But again, the pivotal level is 1700. So keep an eye on that if we hold above or below that this week, okay? What else are we going to look at? So we're going to look at before we look at Euro and Cable, I just wanted to mention two things which I thought were interesting. One is on CAD. Remember we've been talking about this, take this parity mark and 98.50, saying we're stuck in this massive chop range. We needed to see price break outside of this range to see any kind of real momentum on the pair, okay? And we saw price starting to trade a stab lower, but it just couldn't hold, and it's back above, okay? The bigger move short, which we were looking at, and we were actually on this trade, is basically the highs to lows, 50 back got sold, and we're looking for a move back into 96s. Now, what's happening here is that we're chop consolidating here in the mid-range. So I think it's really, it's a difficult read in the sense that it looks like it's starting to turn upwards, but the move upwards has been very sloppy because for it to have been a pure move, it should have held here at the 50 back retracement. And what happened is after it tried to hold here, all of a sudden it made a lower low. So a lot of fake out, a lot of choppiness. So again, I think I wouldn't get carried away making any kind of assumption on a broader term basis unless I see a strong break outside of this range. The moving average I had on my chart was the 200 here on a daily. So the only thing I wanted to point out to the 200 is coming in right, protecting ahead of that parity mark, okay? So I think it's really chopways, sideways trading unless we really get a real break and hold outside this range. And the same way as you got to fake out to the downside, lower low, but still didn't manage to break. Don't forget that even if we move above parity, we really need to get a daily close above these 0030s and expect to see a lot of chop, a lot of people fading, buying, breakout at the parity marker. But, key level, heads up on this range, okay? And the other thing which I wanted to point to before we look at Euro and Cable is Euro GPB. Now, I think Euro GPB is interesting because we've got a confluence of a lot of levels here. So basically what's happening, we've broke back down and now we're moving back up. And where are we moving into? We're moving in smack into this on this weekly, this 50 back. Okay, so we have this 50 back zone on the weekly. If you put the 200 a week moving average on it, you see that it's starting to turn down, and it's probably going to come back down inside this whole range. So basically it's 84.20s to 85s, okay, something like that. So it's going to be an interesting resistance zone. Furthermore, if you go back on the daily, what's interesting here is that we're coming up right into, so, and we looked at this in the weeklies. I think I posted this chart because we're on this trade a few times. Basically, you've got the 50 back got bought very aggressively. And right here, this broader 50 back we had on our chart, the 161 extension of this long move is coming in right in that zone, okay? Furthermore, oops, sorry, that was the wrong... the following move, 50 back got bought, and we're into the 161 extension of that move right here. And on top of it, you see that we're just right pressing that high range of the channel. So even though we could easily see some more pressing and more press higher, I just think it's not a high odds play to get aggressively bullish at highs. And even though we continue to squeeze higher, I think this is going to be a formidable resistance zone, and it's going to be very interesting to watch how we react around this area going into this week. Okay, to the downside levels of interest, I think, is this whole 83.20s into these 82.60s and 82.20s, just to give you some quick levels. But I just wanted to point out that level because I think it's going to be an interesting one to keep an eye out going into the week. Now, let's do Euro and Cable. So since we're on that, let's look at Cable. Cable, this is basically the daily chart I posted this week. And what I was talking about was keep an eye on Friday. All eyes were on what was going to happen into this broader support zone, 59.50 into 59.00, and the confluence of the 200-day moving average. We blew right through it on maybe lower volumes, just a very, very aggressive down move Cable's had here. And all I wanted to point out to you this week is that keep in mind that broadly speaking on a weekly, we are still not only consolidating that triangle, but you see what's happening here. We're smack into that 200-week moving average. So that's a very important level. So that's going to be a really interesting support zone going into the week. And keep an eye on what is going to happen right here into this lower range. You see where the bids came in after this aggressive sell-off. This is basically the 58.20s into 58.00. And I think that as long as we can't break below that level and see a daily close or some very aggressive action below those 58.00s, I think the odds will be in favor for some kind of a bounce, okay? I would say all the way back into possibly, at least into this 59.00, 59.50 zone. And going into the week, unless we can really see, even if we get a press into the 60-50s, it's not going to be a big deal. I think for this to shift back into some kind of bullish momentum, we really need to start to see weekly closes above these 61.70s. Right, so I'm just going to highlight that range. So as long as that high range caps it, this is most likely going to be trading with a heavy tone. But again, I think the odds don't favor getting stubbornly bearish at lows, if you don't have a position. And I think this is going to be an interesting level. If we break below there, my next focal point would be 57.40s. But again, I think this is going to be a very interesting zone to watch, and then to the upside, watch to see if sellers are going to come back in at these previous supports, right, in that whole 59.50 acting as resistance now. So it's going to be interesting to see how this plays out in the beginning of the week. And then let's look at euro last, but definitely not least. So what we got on euro here. So we talked about the fact that we were coming into, even though we had these ultimate targets into these 34s, 3490s, we were coming into what we called pretty strong resistance. And similar to the ES, we said the odds were shifting, especially if you didn't have a position to look to trade or at least tactically trade the short side into last week. And we got a lot of very interesting, very nice chances to play the short side. Very, failure into the 34s here, failure. All those moves back into 3370s were very nice sells with pretty much tight stops for a move back down, and that's still holding. So now the question is, have we put in a nice little double top pattern here to see a nice reversal all the way back down into 3150s and possibly into 3050s? Or are we going to just base here and continue to rotate higher? Okay, a lot of people are going to be focused on this whole series of higher lows. I think it's really all about these 33s, right? And we've been talking about this on Twitter. As long as we don't get a daily close below 33s, the market will most likely still be attracted to try and take out stops to the upside and take a stab at that higher level. But again, what I wanted to focus on, if you look on a press higher, there are so many different resistance zones to the upside, okay? Whereas if we start to break below here, well, then there's pretty much nothing until, from 33s, there's pretty much nothing until 3150s and then back down. So if we start to hold below 33s and see some action, I'm going to be looking for price to come back all the way back down into these 50s lower down. Now, this does not mean I'm going to get overtly bearish, but I think it would be a healthy retracement in a bullish move, okay? So going into the week, you see these are my ranges to the upside. I've got euro, all those resistances going all the way into 34.90, so you can call it 35 upside, and the support is much further down. We might have some interim support coming in at those 31.50s, but the broader range is further down. So you see, as we're pressing up this higher range, it's still coil. It's still going to most likely have a tendency to coil and try and take a stab higher unless we get a daily close below those 33s. But I still think there's a lot more room to move to the downside than to the upside in a short fashion. So, take it for what it's worth, and to position yourself. And it's going to be interesting. But again, any kind of move into 3370s, watch for those sellers coming back in, and any move below those 3300, look if those buyers are still coming in. So interesting. I think it's going to be a really interesting week. Hopefully we're going to get some movement come Tuesday also. And that's pretty much a wrap for me. So I want to wish you guys an awesome end of the weekend, whatever's left of it, for wherever you are in the world. And I'll catch you guys for London Open tomorrow. Have a great one. Take care, guys. Thanks for listening. Bye-bye.